Hi there, welcome to Kneppy Invest and welcome to the first answer and reply video for 2026. It is Saturday, the 3rd of January. Time is currently 9:11 a.m. on a fairly grey day on the mid-north coast of New South Wales. And speaking of geographical regions, the first question I'll be answering in today's video is a geography question from Camalos, who is a member, by the way. You can become a member too. And if you are a member, I'm more likely to answer your questions. Anyway, Camalus asks, what do you think about Southeast Queensland, SEQ? Now, I have lived in Southeast Queensland, apart from now, for 18 years. I moved there late 2007, and the population of Southeast Queensland has grown significantly since then. In fact, I think it's gone up 50%. And to be honest with you, the government has failed to keep up with that population growth in terms of better infrastructure. That is my one complaint about Southeast Queensland. And when I moved to Brisbane, one of the reasons I was attracted to there instead of, say, Melbourne or Sydney was the lower population. It had more of a smaller city sort of feel, and I could live near the city, very close to the city, in fact, for a much lower cost than Brisbane or than Sydney and Melbourne. Unfortunately, population is starting to grow and grow and grow. And I think maybe in 30, 40 years, that whole Southeast Queensland is going to have such a population that it's going to dwarf most other areas in Australia. Now, I do know this is not about geographical region, Southeast Queensland, but whenever I think about this company, Sequoia, TIG code SEQ, I just think of Southeast Queensland. So Camalus is asking about Sequoia, which is a fairly small company on the ASX. I did have a look at this before I started recording, which is actually a benefit for the first question. I can actually have a look at it. Anyway, so Sequoia market cap is 34.94. I would have guessed maybe 20 or 30 million. This company has been under stress recently, and you'll be able to see that in the chart because there is an ASIC investigation because this is a financial services company. In fact, it says it right there, financial services on market index. They do financial planning, stuff like that. Yeah, whatever. I don't know. Anyway, and one of their subsidiaries, I actually did have to look this up, Interprac Financial Planning, recommended Shield and First Guardian, and Shield and First Guardian went bankrupt, and that was I think they went bankrupt or they collapsed or something like that. And Interpac Financial Planning recommended Shield and First Guardian to their clients, if I remember correctly. Just have a quick look at it. Yes, something to do with that. Anyway, that's one of the reasons why the share price of Sequoia has fallen a fair bit, while the markup is down to 35 million. And the market doesn't like risk. So this is a bit of an increased risk. In fact, if you have a look at the recent announcements, go back to November, 13th of November, Interprac intends to defend ASIC proceedings. So there is a bit of risk when it comes to this company because of what happened with one of the subsidiaries, but the chances are also there. The market has overreacted, and this could be cheap. Now, the company did release something recently, Market Update and Business Matters on the 15th of December. I thought this was okay. I did have a look at this when they released it. I thought this was okay. They said, or they mentioned, despite challenging conditions, particularly in the licensee and advisor service division, the company continues to perform ahead of the prior corresponding period. So EBITDA up 15%. Anyway, so that's a good thing for the company, I suppose. But again, there are some risks, investigations, proceedings against this company right now. Against a subsidiary of the company is probably the best way to put it. Anyway, so that's probably the big negative about Sequoia right now, the bit of risk. Now, if we do have a look, and what I'm going to do right now is just have a quick look at the financials. Now, I'm not the biggest fan of financial services, even though I do own a few financial services companies. And the reason behind that is because of valuation. But a lot of these companies don't have much of a moat. So I would want to limit the amount of exposure I do have in this particular area. So I'm just going to have a quick look at Sequoia Financial Group and their financials. I have not done this for a long time when it comes to this company. Apparently PE ratio is like 11, which is sort of understandable. Let's just have a look at the revenue growth. Nice revenue growth. Now, some of this could be because of acquisitions, that sort of thing. Now, this is over the last 10 years, gone from $16 million to 119. And I would assume profits, where's the profit here? Here it is. Company's probably profitable. I'm pretty sure they have a dividend. And the profitability of the company can be quite lumpy, up and down, up and down. So not what you want to see. And the other thing I'm going to look at here is just shares on issue. I would assume shares on issue have gone up a fair bit, and they have. So shares on issue in pink, they've gone from 49 million up to 123.6 million. So they've almost tripled over the last 10 years. So this is how some of these companies grow. They just acquire and acquire. And whether those acquisitions are beneficial for shareholders remains to be seen. I can think of one other company that has done this. I think it was Prime Financial Group I had a look at, which I actually do own. And they've actually increased their revenue by quite a bit, but earnings per share, or no, revenue per share has not grown all that much, if at all, because of dilution. So that is one thing to keep eye on if a company is a serial acquirer. Anyway, so I would classify, if we go to the overview section, I would not classify Sequoia Financial Group as high quality. Now, revenue per share growth over the last 5 years up 10.1%, 10 years 19.9%, but I do prefer revenue per share growth. In fact, earnings per share growth has gone down the last 3 years and 10 years, up in the last 5 years. Operating margins, no operating margins. Gross margins 22.6%. Return equity and return invested capital 5-year average nice above 10%. But I would struggle to classify this company as high quality. Therefore, I probably wouldn't look at the valuation right now. P ratio 11. But the possible thing for Sequoia Financial Group is because of the increased risk, and the market doesn't like risk, or investors don't like risk, or increase is in risk, there's a chance that the share price has sold off to the point where there might be value in the company. Now, when the share price last dove was around that 13th of November announcement, share price decreased 10, then 14% in consecutive days. Share price has recovered. So share price has recovered. So I think there might have been some value at that level, around 22 to 24 cents, currently at 28.5 cents. If you have a look at the weekly chart, not the chart of a high quality company. In fact, the share price has dropped a fair bit since 2021-22. In fact, it's gone down almost 60% or so. And if we even go back further, yeah, nothing much. But maybe this is the low. Maybe we're near the low for Sequoia Financial Group. And probably the best thing going forward for the best thing that could happen to Sequoia is these ASIC investigations in regards to Interpack or whatever it's called, and nothing much comes from it. And then you will see good value, possible good value, and that is when you might see the buying coming in. The other thing is some really big volume coming in when they did release that news in November. So there was a bit of selling and a bit of buying as well. Anyway, so not really on my radar right now for Sequoia, because there could be more to come in terms of downwards pressure on the share price, particularly if these investigations find something really bad, which we don't know. Okay, so thank you for that, Calaboose. About Southeast Queensland, the geographical area. I liked Brisbane when I first moved there, but it's becoming really big. Anyhow, David Ray, sorry, Sophisticated Investors Classic. I'd be interested in your opinion. By the way, another member. You become a member too. And if you do become a member, better chance that I'll answer your questions. I think I've already mentioned that. I'd be interested in your opinion on SkyCity, had a breakout of sorts. So this fits alongside Star Entertainment Group. So both of these companies popped up on my radar at the same time. Star Entertainment Group was releasing some announcements. SkyCity hasn't. And if you're confident, you could do both. I just went Star Entertainment Group because I think maybe there's more upside, maybe. So this is me by taking a position at 13 cents. Share price is now at 17 cents. A little bit of selling on a Friday session, but that's okay. You're always going to see that when the share price rallies like that. But you asked about SkyCity, and I'm pretty sure this company has not released much news flow recently. Let me just confirm that. They've announced when they're going to release the half-year results. So somewhere or sometime in February and 19th of February. So more companies should be releasing these sort of announcements when they're going to release the half-year results. And because we're 1 month away from half yearlies and yearlies, some companies will be releasing a yearly report. So the last price-sensitive announcement the company released was the AGM on the 31st of October. So no significant news flow from this company. However, when you look at the chart, this has similar vibes to SkyCity. So maybe you could buy both. take a position in both, or maybe your choice between the two would be based on risk, maybe less risk in SkyCity, or maybe it's based off the potential upside. So maybe there's more upside in Star Entertainment Group, or maybe you think there's more upside in SkyCity and there's lower risks. Maybe. So this chart also looks good. Down a little bit on Friday, but that's okay. The chart is looking good for SkyCity. I do like this chart. And in fact, I will record and release a potential trade video for members only, because that was a request from one of you. I think it was Klima. Anyway, so the chart looks good. Apart from that, the company, I would classify both companies as being pretty crap. But when it comes to trading, I don't really care about that sort of thing. And you also mentioned he had a breakout of sorts. Yeah, I'd agree with that. I think the chart's looking good. By the way, the other thing I should mention is share price is at August. We're talking about a 5-month highs. I do prefer 6-month high, but I would take a 3-month high, prefer 6-month high, probably even prefer a 1-year high, but 5-month high is pretty good. And yeah, I do like the chart. Devshah was expecting Telix coverage. Okay, I'm sorry, Devshah, because you did ask about Telix and last week, and I did not answer you. Wait there. Where's the community? Oh, that's community. Okay, so let's do this. I'm going to do this. Devshah. Why did I say that wrong? Devs. No, I did that right. Dev. Sort by newest. Maybe this will work. No, I don't know. Let's just go back to community. Oh, someone's just put in their stock picks. Go. Stock picks. Stock picks. Go. Put in your stock picks. I'm not sure why that did not work. Oh, you know how I could do it. Telix. Oh, there's going to be a lot of Telix here. Yeah, a lot of you picked Telix. Here we go. Devshah asked 8 days ago, so I missed this one. I might have just missed it. Would you please cover Telix in Q&A? Why is it hammered in last 6 months? 51% down in last 6 months. And then someone mentioned, what was it? Here it is. Jack says, Telix in your super, you're never going to be able to retire until you're 100. And then I just wrote, even with Telix having a bad year, my super rose 25%. The power of diversification, which is true. By the way, Telix is one of the more popular picks, popular viewer picks for 2026. Anyway, so let's have a look at Telix. So I'm answering your Telix question, Devshah. Might be a little bit late, but I'm answering it. So let's have a look at Telix chart. And I'll be honest with you, we'll have a look at the chart first, and then we'll have a look at a bit of the news flow. The chart is horrible. I think this is a horrible, horrible looking chart. In fact, I did a video and released a video about structure for members only, and you can see a change in structure with Telix. Per beautiful change of structure here. Uptrend from 18th of January all the way through to the start of 2025. A beautiful uptrend. We had a high in February, so when they released results last February, we got to a new high. The next high was not as high. So in fact, there's actually a head and shoulders here. Yeah, almost a beautiful head and shoulders. If you don't know what a head shoulders is, it looks like a head and shoulders. So head and shoulders pattern. I knew there was going to be some sort of, here it is, yeah, head and shoulders. So the head is just above the two shoulders. And in fact, this looks like a head and shoulders right here, almost perfectly. And the way to trade this would be if you just put a line right there and the share price falls below that, that would be a sell. And funnily enough, the share price actually rallied after that and got to the previous high. But that was the first sign of a shift in or change in structure for Telix, the share price sort of going into a downtrend. And eventually, share price did move into a downtrend. And that was in June, not that long ago. So share price at that point was $26. Now it's $11.36. So share price has more than halved since the share price moved in downtrend. So this would have been, if I was trading this, I'm not trading Telix, by the way. If I was trading it, that would have been a sell at that point. And maybe I should be trading more because that was, in my way, an obvious sell. But this is my super, and I'm not trading my super, not trading anything in my super. Anyway, So what I'm looking for here is a shift in structure again from a downtrend to an uptrend, and I will add to my position. By the way, I bought at 666, and share price is still up a significant amount since when I bought. But again, the chart looks horrible. And one of the reasons why the share price is decreasing is no real negative news or anything like that. Although on the 23rd of July, they did release something negative, down 15%. I'm trying to remember exactly what they released. What was that, 15th of July? My memory's terrible. 23rd of July. They did release something, 23rd of July, pending release of shares from voluntary escrow. Oh, no. It looks like Telix reports $204 million second quarter revenue, up 63% year on year. The market was not excited about that. And the share price, that was sort of the trend, really sort of the confirmation of the shift in structure and trend, 23rd of July. And I do remember reading or listening to, I forget who it was. Was it Marcus Today or someone who they just mentioned they're trading this and they got out. And I think just how the structure changed. So sentiment went from negative or positive to negative, and a lot of people just got out because of that shift in structure and the shift in sentiment to negative. So what we need is some sort of catalyst to shift sentiment from negative to positive, and we haven't received that just yet. But the more this drops, the more it looks like it's really good value. Don't look at the PE ratio, however, but you shouldn't look at the PE ratio for this type of company. They're growing really quickly. But there is a competitive pressures in this space. They are mostly a one-product company. They are now selling two products, if I remember correctly. Oh, they also made an acquisition, so they've diversified a little bit more. For instance, if you go have a look at their most recent results, half-year results. So this is one of those companies that will be releasing full-year results in February. We'll have a look at the presentation. They bought this company called, I forget what it was called, and that is generating revenue and has growth. So they're more diversified, and that is a good thing. But you want these sort of companies to be really diversified. However, in saying that, sometimes if a company is too diversified, you don't see much growth. So Lucix is the one they're selling, and what was a company they did buy? Oh, RLS Radio Pharmacies, yeah. And in fact, if you have a look at the results here we go, revenue, nice growth in revenue, and that yellow section is the RLS revenue. But even if you take that away, still nice growth. So maybe the market was expecting more growth, that sort of thing. But really, in my opinion, the reason the share price is dropping is just negative sentiment. That's it. And eventually, and don't forget, when share price is an uptrend, more than likely the market is going to overreact to the upside, but the market also overreacts to the downside. And there will be a point when this company looks really attractive valuation-wise. Anyway, so that's it for Telix. I think I did answer this one. King Kazama just asked, why do you use futures CFD rather than spot price, especially for precious metals? And I just mentioned most commodity trading occurs in futures. I think it's probably a little bit more complicated than that. But even if you have a look, whenever I look at an expert, a person doing technical analysis, and there's way more people out there who have way more expertise in this area that always look at futures. And I think that's probably the reason why I started looking at futures, simply because everyone else did it. All the experts did it. And and that's most commodity trading occurs in futures. In fact, when I was working on a trading floor back in Tulsa, Oklahoma, the largest trading floor west of Chicago at the time, this was on a company called Williams, and everything was done in futures. Everything was done in futures. In fact, that company made a lot of money betting the future of energy for that particular year because they went the right way, if I remember correctly. Anyway, so a lot of trading is done in the futures. And to be honest, there wouldn't be much difference between the two. Futures a little bit higher, future price is a little bit higher, but all trading is done, or most trading is done in futures. I'm wondering if I should go, why should I look at futures charts for commodities, not spot price. See if I get a good answer here. And I have to spell it right. Forward-looking information, price discovery, futures contracts, agreements to buy. Oh, we knew that. Risk management and hedging, liquidity and accessibility, transparency of market structure, informed decision-making. There you go. Okay, so yeah, you can get a lot of information. But yeah. Oh, this is just me. Someone, sorry, Sensei. The old edit. Vinhili put mithril, silver, and gold. And then Sensei said, conditions are strictly only ASX stocks. And then I said, mithril is on the ASX. And then Sensei said the original comment was edited. Anyway, so this is the problem when I just put responded, I get all my response. Anyway, this is how I do answer reply. What I do is I heart it. And that means I've responded to it and I can filter out all the ones I don't want to respond to. But when I do filter out just responded, I also get any sort of comment that I've put actually a comment in. Anyway, let's go to Tinker Table. We are at the beginning of a super commodity cycle, which should last 20 years. How confident are you? Oops, excuse me, I made a really small burp there. That doesn't mean it always goes straight up. It won't. Lots of corrections and secondary trends. But if you hold metals for the next 15 years, it would be worthwhile. So I saw this comment and I went, let's do a little bit of research on, I wouldn't call it, maybe not super commodity cycles. So I did a little bit of research because I've never done it before. Anyway, I went back in time, had a look, and I did have to write some notes about this. So I'll put this on the other screen. I just wanted to look at some historical super cycles. What causes super cycles? And are we possibly in a super cycle right now? Because I have seen a fair bit of commentary around this. In fact, here's an article from JP Morgan released in late November. Copper prices could soar further amid a tightening market. And there was another article here from Investor Markets, how to recognize a commodity super cycle, or what happened to the commodity super cycle. This was 15th of June, 2023. So maybe a little bit early. Anyway, so just went back through history, looking at commodity super cycles, the industrialization super cycle, late 1800s, early 1900s. So we had railroads, steel, electrification, rapid urbanization in Europe and the US. So the key commodities there, which is very important. What are going to be the key commodities in this potential super cycle commodity, whatever you call it? So key commodities back then were coal, iron ore, steel, and copper. And then the end, what caused the end? Well, World War I, and then overcapacity, and then Great Depression. And the common theme among all these is usually about demand and supply. And in fact, if you answer anything when it comes to economics, well, maybe not anything, but if you think about anything when it comes to economics, stock market, really anything in life, maybe you could just go back. It all comes back to supply and demand. Anyway, so overcapacity, which would be, makes sense. If there is a super cycle, eventually you're going to see an oversaturation or an oversupply, and that should bring down the prices. This is true for all commodities. It happens all the time. That's why commodities are highly cyclical, because of demand and supply. The next one was post-World War II reconstruction. So this was a fair while from, well, the end of World War II up until the late 60s. Rebuilding Europe, Japan, suburbanization, highways, consumer appliances, oil, steel, copper, aluminium, or as they say in the United States, aluminum. And maybe that's the only country that says aluminum. Don't understand why. End of that was productivity slowdown, oil shocks, inflation, and demand is destruction. So productivity plus oil shocks led to inflation, and that led to demand destruction. So again, demand. So first time was supply, next one was demand. The next one was the oil shock, inflation, super cycle. I won't talk about that because that was just mostly oil, also a bit of gold. Then the most recent one, 2000 to 2012, China industrialization super cycle. So China joins WTO, urbanization of hundreds of millions, infrastructure, housing, manufacturing, iron ore, coal, oil, copper. China pivots, and the end of it, China pivots from construction to services, mining, overinvestment. And again, that sort of makes sense because it's a super cycle, commodity prices going up, overinvestment, and eventually we got to an oversupply. Anyway, the question becomes, are we entering another super cycle? So what are the catalysts behind this a potential super cycle. Energy transition. So we're talking about electrification, grid upgrades, renewables, storage, all that sort of thing. And in that sense, that means the critical commodities would be lithium, nickel, uranium, rare earths, and copper. Notice the theme here. Copper is on all of these. Anyway, this would be more of a, it's not really a cyclical, it's more of a structural shift, a bit of a structural shift. But very important here is another reason we might be heading towards a super cycle is chronic uninvestment over the last 13, 14 years, maybe even less than that. So the bottom of the cycle was 2016. There are some nice graphs out there, which I won't show you now, but we have seen a collapse in mining and oil capital expenditure. I've got here after 2012, but I would have assumed it's a little bit after that because or maybe not, because the bottom of the last cycle was 2016. That was a definite bottom. And maybe the collapse in mining and oil capital expenditure happened a little bit before that because everything was collapsing, right? Anyway, so supply is not there. So there's less supply coming onto the market because of this underinvestment. In fact, if you go back through the last 15 or so years, what shareholders wanted was more of the dividends from mining companies. And what they did previous to the high dividends was to put all that money into finding another company they could invest in, new, like take over, that sort of thing, or a new mine. So it's all about capital allocation at that point. And what a lot of companies or mining companies started to do when it came to capital allocation was to set aside that money to give back to the shareholders. So chronic underinvestment. A few other reasons I did find: geopolitics and deglobalization. So resource nationalism, strategic stockpiling, friend-shoring supply chains, reduces efficiency, raises marginal costs, inflation and fiscal dominance. So government spending heavily on defense, energy security, and infrastructure, definitely happening. Commodities historically outperform in these sort of regimes, but that's the bull case. But there are also some reasons why we might not be moving to a classic super cycle. Anyway, so demand fragmentation. So there's no single buyer like China, 2000 to 2010. Maybe it's going to be a group effort. I don't know, but we don't have anyone like China helping us out. But maybe we don't need that in this sort of super cycle. Any transition demand is broad but uneven. Technical substitution, battery, chemistries change, recycling improves, efficiency gains, cap extreme prices, high interest rates. There's also that possibility. Slow speculative excess delays marginal projects. Anyway, so likely winners, if there is a super cycle, copper. Yes, so copper. Chart looks pretty good. Uranium, yeah, I'm less excited about uranium. Lithium, nickel, again, less excited about nickel, but the price of nickel has been doing interesting things lately. High quality, low-cost miners, energy producers with discipline. Anyway, so that's it. I haven't read this particular article, so maybe they were just a little bit too early. What happened to the commodities super cycle? In fact, you can see this, the commodity index, and I'm wondering if I can actually look at that right now. GSCI commodity index. I wonder if that's in a GSCI commodity index. Yeah, I want to see if I can find this somewhere. This is a commodity index trust. Let's see what this looks like. Oh, no, it does show the massive drop from 2012 to 2016, but we haven't seen much of a gain. I don't know what this is, but I just want to see what this particular GSCI commodity index looks right now, because definitely between 2003 and 2008, there was a massive increase in commodities. Surging commodity prices, surging commodity demand, surging commodity supply, again, demand and supply. Okay, so this is a little bit old. Why not a super cycle? Anyway, so thank you, Ticket Table, for giving me something to think about. And you're absolutely true. It won't go up in a straight line. In fact, if you have a look at the price of, what's a good one? Oh, I think just silver right now. Silver, if we have a look at silver right now, if I can find it, a lot of volatility. Well, that's the weekly chart, but then on the daily chart, a lot of volatility here. I think even copper. But copper's on the precipice of breaking out, in my opinion. And breaking out would be getting above this dashed line. It struggled, but I think eventually we'll get above that resistance area or zone. Kelly Ma, hi Kneppy, have you by the way, Kelly Ma is also a member. Hi Kneppy, have you traded Syrah Resources recently? Based on chart in your experience, what would be the next resistance level for Syrah Resources? Thanks a lot for your insights. Syrah Resources, I have not traded this company, but it's one of my favorite charts on the ASX because of the, why am I burping so much? I did have a few drinks because I went for a run. So anyway, this is one of my favorite charts just because of the volatility. Look at this. I think I've shown this a few times. I'll get rid of this line. It's just insane volatility, but also it's a well-structured, highly volatile chart. The reason I say that is you can see these massive run-ups in price, and each run-up is higher than the previous one. And also the share price drops to a support line, which is the uptrend line. And it's done that now 3 times. And most recently was back in middle of December. Share price dropped to about 27 cents. And that was a good time to buy it. And the share price has popped up to 34. So maybe Syrah Resources is on the precipice of another run. Now, doesn't necessarily mean it will go for another run, but it's done it 4 times in the past 9 months. So one of my favorite charts at this point in time. Your question was, what would the next resistance level? Just based off what it's done, I could see this going on a massive run past 60 cents. I could see it doing, so there's maybe 100% upside from here, maybe not that much. But I am a little bit more dubious that we won't see another run up like we have seen over the past 9 months. Maybe this is it. And if we don't see any enthusiasm in buying, you can see the last few run-ups, we have seen a bit of an increase in volume, and we haven't seen that increase in volume yet. But maybe it's just because we're at that time of year. Anyway, a possible interesting trade right now, Syrah Resources. It would have been a better lower risk trade back middle of December when the share price was 27 cents. Okay, interesting one. Matt says, on QBE, hasn't it clearly reversed the trend of a historic support level with a triple bottom? Plus, I have a 450 million buyback currently happening, which is providing extra demand. I typically ignore buybacks, but they do, technically, they do actually provide a bit of support. Yes, so they do technically provide support, but I definitely do ignore buybacks because I have seen share prices of companies keep on going down because the company, even though a company has or announced a buyback. So let's have a look at the chart for QBE. And I did have a look at this company, was it yesterday or the day before, the chart? And I had a look at the weekly chart. And again, you get different perspectives when you have a look at, you can get different perspectives depending on your time frame. So let's have a look at the chart for QBE. So on the daily chart, I don't have any interest in this. In fact, the share price is in a downtrend. It has bounced off the previous lows, which is, I suppose, a good thing. So that's about it. So when I look at the daily chart, I go, meh. But when you look at the weekly chart, I get a different thought. So in fact, the weekly chart looks pretty good. And in fact, if you have a look at the weekly chart, you see the share price rising and then dipping and then rising and dipping. So based off the weekly chart, this is still an uptrend, a long-term uptrend because higher highs, higher lows. And the reason I say that is we have a high, so back in July 2023, and then a low in December, then the next high in June 2024, then a low in August 24, and all these highs and lows are higher than the previous one. And then the next high was in June 2025, significantly higher than the previous one. And if we are at the low, that would be higher than the previous low. Now, the reason this could be a low, which was reached like a month ago, is because that is a really good support level. The reason this is a support level, so that line right there, is that was the resistance back in 3rd of June. You can see that was the high. Then the share price pulled lower. Share price broke above that resistance level on strength. 11th of November, beautiful breakout. Tested that level on the 7th of April, or around that week anyway, and has tested again, looks like. So probably my only concern would be that if you say this is, it's not a lower low, but it's very similar to the previous low. So maybe the structure is starting to change on the weekly chart for QBE. That was a possibility, but I wouldn't be surprised, just like in this chart, the share price might go on a run. Valuation, I think the P ratio is fairly low. According to TradingView, P ratio is at 10, dividend yield at 5% almost. So maybe there is value with QBE. So definitely one where you get a different, you might have a different opinion just by looking at the daily versus the weekly. So thank you for that match. Triple bottom, I don't see any triple bottom unless you define these 3 dates. When I define a triple bottom, this could be wrong. I want a little bit more distance apart from these 3 dates. So 27th of November, 4th of December, 10th of December. I want a little bit more separation. I'm not sure if that's the way to look at it. Triple bottom, time between 3 bottoms. Triple bottom shows 3 distinct lows at similar price levels separated by 2 rallies. Anyway, time itself isn't fixed but reflects market consolidation. So I still think that is trying to hint that you want a bit of time. And again, I'm not an expert. I wouldn't call myself an expert when it comes to technical analysis. But thank you for that comment, Matt, WH94. Okay, Mr. VetPower says another tin company on ASX is Syrah Resources. And I would love more suggestions like this. So I have started in TradingView, I have started a copper watch list. I have already had a gold, already had lithium. I developed a silver watch list and uranium. Already had that one. So I probably should have tin and maybe nickel. What else could I have? I don't have oil. I'm pretty sure I don't have oil. Yeah, I don't have oil. Maybe I should have. Oh, no, I do have energy though. So I do have energy there. Yeah, so I'd love little recommendations like this. Syrah Resources, SRZ. Let's have a quick look at the chart for SRZ. We'll focus on the weekly chart first. No, daily chart first. And the chart doesn't look all bad. Looks pretty good. Market cap of Syrah Resources, according to TradingView, is 78.51 million. Shares on issue 1.45 billion. Chart looks not bad at this point. Weekly chart, probably, yeah, okay. So daily chart, I get nice fuzzy feelings about the daily chart, but share price is at the previous high, which could be a bit of resistance. But again, if you have more recommendations for tin companies, because I can only think of one before now, it's Metals X. Metals X is it. The one thing I was thinking of doing was just going to ChatGPT or an AI and just saying it, can you list all the ASX 10 companies? In fact, if we do that, let's do that. No, you can do that yourself. Kelly Ma again. Kelly Ma writing a lot of good comments, although Kelly Ma is a member. And if you want your answers and replies, or answer and comments replied to or answered, become a member. I think that's the 3rd time I've mentioned that. Anyway, hi Kneppy, would you be able to find time to do a member-only potential trades each weekend like the ones you just did? Thanks. Yes, I can do that. In fact, I am now intending to do that this weekend. I'll do a potential trades video for members only. I'll release that on Monday morning. So look out for that, Kelly Ma. Oh, here we go. Ben Hutchison, I had a bid on Hillgrove in the opening auction at 4.3 cents. That didn't trade. That's okay. I've already got a big bag and was just going for an extra. Glad you got on the train at last. Rogadorn, if I said that rightly, I always just want to say Roger. Rogadorn. It just needs to go on a proper run now. Our method says it looks weak compared to Aries Resources and AIC Mines. And Ben Hutchinson says buying copper on fundamentals, not technicals. And Hillgrove is interesting from evaluation. One of the reasons why I do like Hillgrove is because it hadn't rallied. So I think there was a lot of negative sentiment and there was a bit of pressure on the share price. Hadn't rallied unlike other copper stocks. And I got in and share price has broken out. I'm calling it right now, share price has broken out. And the really good thing I liked here with Hillgrove was just the increase in volume from September. And I think we've just seen a flash out of all those shareholders who got in at higher prices. They're sick of this. They're seeing other copper shares rallying, and they go, I'm going to get out of Hillgrove, get into these other copper stocks like Aries Resources and AIC Mines, Sandfire, Capstone Copper, 29 Metals. I'm going to get out of Hillgrove. It's just not running. And as soon as I get out, that's the resistance is gone. And I think that's what we're seeing in the last 3 or 4 months. And I think because that resistance is gone, share price is now starting to rally. So I agree with Ben. Based on valuation, this one does look attractive. But if we do go into a super cycle, when it comes to mining, this company is going to benefit. And many companies, or in these sort of situations, what's the saying? Tide lifts all boats, or whatever that saying is. And in this sort of situation, a tide would lift all, or commodity super cycle would lift all these sort of companies. So this could be the breakout for Hillgrove. So very excited where Hillgrove could go from it now. Okay, thank you. A couple of people mentioned that the only reason Euroz Hartley shot up was because last weekend Rask released a video recommending them and built a strong case for high growth in 2026. I believe someone else mentioned that. Yeah, Barong Meyer says, I think Euroz was a mention on Rask channel on weekend's video. That's the reason it's up with Sequoia Financial members. I do on occasion listen to Rask podcasts. So Rask Euroz. I'm just going to see if I missed this one video. Not video translator. Let's have a look. There's nothing much here. So I'll look for that when I have a little bit more time. But this can happen. Sometimes you'll see a share price of a company rallying. You don't know why. And all it is someone recommends them. And that's why the share price goes on a rally. Anyway, so thank you for that. If I can find it again. Euroz. Thank you for that VB ad. And let's have a look at the chart for this one. So I'm pretty sure it's like a stockbroker based out of Perth. I am pretty sure it's a stockbroker based out of Perth. Financial Solutions, and yeah, founded in 2008, is headquartered in Perth. And the chart, by the way, does look good. The chart actually does look good. So there you go. I'm pretty sure they gave a pretty big capital return at one point. And this is another one where we have seen a shift in structure of the chart. Look at that shift in structure just by looking at the daily chart. And a beautiful consolidation phase, and now the share price has moved into an uptrend. I think that's without doubt. You cannot argue with me right now the share price is not an uptrend. Euroz Hartley. I did have a look at this company recently, and it did look sort of cheap. Well, that was a while ago. P ratio 18.8, dividend yield 4.66%. But P ratio might be, maybe there's a one-off. Speaking of recommendations, VBED also says Red Hill Minerals would have got a mention today. It shot up from 449 to 486. Again, it rose as a result of Rask last weekend building a strong case for high growth in 2026. And then Kane's Boy says royalty company, beauty of a chart. So I don't know anything about Red Hill Minerals. If we have a look the other day, so more than likely they did not release anything. And that is why it was not mentioned, because they didn't release anything. No reason why the share price popped up. In fact, the last time they released anything of note was the Appendix 5B on the 30th of October. So let's open that up. Even their AGM, it was not considered price sensitive. So royalty company, I suppose lower risk, that sort of thing. Let's just have a look at their most recent. So receipts, 4.8 million, cash flow, 2.4 million, spending a lot in exploration and valuation and non-other current assets. So not much cash flow. A lot of income taxes, however, so that's probably the reason why. So you're speaking as though this is a royalty company. Royalty revenue, Onslow Iron Project of 7 million. Okay, so iron ore. I'm assuming they have other royalty streams. Maybe that's it. It's just iron ore. Oh, here we go. Thompson royalty, 1.5% net smelter royalty, intrusion-related gold and copper Thompson project tenements. Anyway, let's have a look at the chart, because I did have a look at this chart. And yeah, I agree. The chart does look good. So this is another case where doing not much, and then all of a sudden share price popped up on the 13th of October. And the 13th of October was, let's have a look. Nothing happened. For some reason, share price popped up. I don't know why. But then the share price went sideways for a little while, maybe 1.5 months, and then share price went on another rally. You can see a beautiful structure here. Share price rallying, going sideways, rallying, going sideways, another rally because of Rusk recommending it, and now probably going sideways for a while. P ratio 33.68, dividend yield 8.16%. Not sure why YouTube Studios does this. It goes backwards after I've talked about something. Would I define this chart as a beauty? It's good. Look at the volume as well. When the share price rallied, nice volume. Share price rally, nice volume. Share price rally, nice volume. Share price then decreased, or the volume decreased as the share price went sideways. Exactly what you want to see. Ed Cavey says, hi Kneppy, would love to hear your opinion on 3DA and EVT. 3DA is Amaero, I believe. Amaero. There's something to do with 3D printing. Oh, that's right. Amaero receives 4.6 million refractory powder order from Titomic. There's something to do with 3D printing. They provide the stuff that goes in 3D printers or something like that. Leading domestic producer of high-value refractory and titanium alloy powders for additive and advanced manufacturing of components utilized by the defense, space, and aviation and medical industries. And I'm pretty sure that has something to do with 3D printing. So your opinions on this company is probably, I am assuming this company doesn't have much. Let's have a look at the most recent pennies 4C. I'm assuming this company doesn't have a lot of revenue right now. Oh, they have a fair bit. Receipts of 3.5 million a quarter, but burning through a lot of cash. Burnt through $10 million just in operations, and a further 11.4 million in capital expenditure. So burning through a lot of cash. The next thing I want to see is how much cash they have. Oh, $48 million of cash, but they are burning through quite a bit. And they do have a little bit of debt as well, about $12.9 million of debt, which I think means the company has a fairly high market cap. I'm going to say 200 or 300 million market cap. $276.25 million market cap. So a fair bit of promise priced into Amaero. So I think the question becomes your conviction about what they're doing, your confidence about what they're doing and how successful they're going to be in the future. My confidence wouldn't be that high just simply because I don't know a lot about the company and what they're doing. But let's have a look at the chart. So for me, this would more be more of a trading stock. And I think just by looking at the chart, you can see a lot of volatility, which is probably understandable for a company that would be hard to value. Share price recently, or in 2025, was as low as 20 cents and as high as 54 cents. Looks like 20 cents was a good time to buy because that is a double bottom, looks like. And maybe the share price is rallying again off that low. Share price has already gone up almost 50%. But yeah, so maybe if you're in this for the long term. But again, it's probably too speculative for me just now. I'd like to see a little bit of proof of concept. The other one was EVT, which is EVT. I'm pretty sure it used to be called, no, it's EVT Leisure and Tourism or something like that. They own cinemas and ski resorts or hotels, something like that. I'm trying to think. Motels, hotels. Oh, Ridges Geelong. Restaurants, looks like. And they acquired something in Auckland. what I'm going to do now is I'll have a look at the quality of this company, and straight away I'm going to assume that I would never classify this company as high quality. So revenue growth, fairly mediocre over the last 5 years. Over the last 3 years, up to 12.7%. Earnings per share has been negative over the last 3, 5, and 10 years. That is a bit of a eek. Gross margin 76.6%, operating margin 6.9%. So low margin business, which is sort of understandable for what they do. Return equity and return invested capital, a 5-year average is below 5% for both. In fact, return invested capital at 0.7%. There could be a reason behind that, which I won't get into. According to this, the PE ratio is 62.7. I wonder why that is. That could be a one-off. So let's just have a look at the revenue for this company. And nothing. In fact, if I see something like this over a 10-year period, instantly I go, not for me in terms of high quality. The only reason I would even think about buying this would be just a trade. So that's a revenue. And I'm just going to have a look at the income. I'm assuming there might have been a one-off. And even the revenue over the last 5 or 6 years has been quite lumpy, particularly the last 3 years. Now, prior to 2020, a revenue was actually decreasing and profit was not increasing. So not much to like, in my opinion, when it comes to EVT, just by looking at the previous 10 years of financials. Now, maybe the next 10 years will be really amazing, but I don't see that with what they do. And EVT, let's have a good chart. So I'm only willing to trade this one. And, oh, there was a trend killer event. We have a trend killer event here, 25th of August, results. Share price down 14.7% after share price had been in an uptrend. And I'm hoping, if I don't have this in my trend killer watch list, I'm putting it in, no, it's in my trend killer watch list. So that's the very definition of a trend killer event. Share price in an uptrend, they release something negative, results, share price is now in a downtrend. Again, trend killer, it's in the name. And the last time share price was this low was back in March, not that long ago. Weekly chart, I'm going to assume this weekly chart is a chart of a company that has just not grown. In fact, the share price right now is the same level it was back in 2015. So yeah, no growth. We've seen that in the financials. Now, maybe they can grow in the next 5 to 10 years, but that'd be more hoping or more speculating. So yeah, that's my thoughts on 3DA, Amaero, and EVT. Okay, another one from Kelly Ma. Does Macro Metals M4M will have a breakout? Massive volume today on a very quiet day, promising iron producer next year end. So I don't know much about this one. 4, 5, M4M. Let's just have a look at the markup. I'm assuming fairly low. 36.55 million. Shares on issue, 4.57 billion. That's a little bit of a turn off for me. The amount of shares on issue. Oh, and the share price is below 1 cent. That's a big turn off for me. Okay, so the best thing this company could do, this is just my opinion, is to decrease the shares on issue. So maybe do at least a 10-for-1 consolidation. You get the share price up to 8 cents. Maybe you could even do a 20-to-1, a 50-to-1. Oh, a 50-to-1. Shares on issue would be like 90 million and the share price would be 40 cents. That would be the best thing for me, because when the share price gets below 1 cent, I think there's a lot more pip traders and the share price has a much harder time to move up because of pip trading. Anyway, I'm not sure if that's a real thing. I should do research, but I've seen it before. Anyway, let's just have a look. Acquires 27.3% of Extension Iron Ore Project. I'm looking for any sort of presentation. Have an annual general meeting presentation. And let's have a look at the most recent Appendix 5A. I'm assuming they're not in production. There are more of a, might be going into production by your comment. In fact, they mentioned they're a mineral exploration, development, and mining services. Oh, mining services company. They also own Macro Mining Services, bespoke, safe, and highly value accretive mining services. I don't mind those sort of companies, by the way. Okay, I'm having a quick look at what they're doing. Very quick. I'm speed reading this. So I'm going to miss stuff because when you speed read, you're going to miss stuff. Commence detailed study to inform final investment decision targeted for first quarter 2026. So they're at that point. They need a decision. So I'm assuming they might have a little bit of revenue just based off mining services, but how much? Well, they don't have anything. So even though they have mining services, they're not providing much money for the company. Okay, so let's have a look at the chart. So not my favorite at this point. And one of the reasons why I might not be liking the chart is the share price is below 1 cent. If you have a look at the weekly chart, whoa, not sure if this is the same company, but yeah. And if you have a look at the daily chart, massive run in the share price back in 2024. Share price went from 0.3 to 5 cents, and the share price has fallen all the way back down. Now, in saying that, there is a little bit of something happening, maybe happening. Share price has popped up recently, but there would be a fair bit of resistance moving forward. There was nice volume, but the volume has been this large in the past, so this could be just a one-off. What I do prefer to see is some really big volume, and when I say big volume, I mean like volume they haven't seen through the year. For macro metals, I've seen this sort of volume through the year, and yeah. The chart is starting to look a little bit more interesting, but yeah, shares on issue, share price below 1 cent, a little bit turn-offs for me. That's just me. It's just me. Just because I say it and think it doesn't mean I'm true. My conviction will be much lower than your conviction. If you like the company, do whatever you want to do. 6 meter, be in charge of your own decision making. That's the most powerful thing you can do. Don't blame anyone else or give anyone else credence for your decisions. Own up to your decisions. I have had people blaming me for a trade that's gone against them. And it's your decision. Own up. 6 meter. Well done. I listened to your videos and my lovely wife who has an ether theory on money. What the heck does that mean? I'd love to know what ether theory of money is. I might have to Google this. Ether theory, not now. Says she doesn't mind them as they are clear and no. Oh, you're talking about my videos. Clear and no ums or ers, and you're enthusiastic about what you're doing, which is very important. Passion, enthusiasm. Keep up the good work. Thank you. Funny enough, I'm very self-conscious when it comes to ums, ers, and I even know it when I do it. I go, Rrr. So inwardly I go, oh, I shouldn't have done that. I intentionally try not to say, I just said it right then because I've been trying not to say it. When you watch an interview with someone who is famous and so many just pop up and it just turns me off. I'm sorry if you're someone who is highly famous and you say that a lot. It's just a big turn off whenever I hear so many times. You know what you do. You go out and we went out there and we found this tiger and we saw the tiger and we slept with the tiger and then the tiger ate one of us because you're not supposed to sleep with tigers. Anyway, it's just not a good thing. That does turn me off. Ums and ahs. It's sort of a filler, and I'm trying to look. You can definitely see when people have had training, particularly sports people had training. You can definitely see it because we all want to feel silence can be uncomfortable, and we want to feel that silence with ums and ers. And yes, I've intentionally included silences in this little portion of the video. Blake, hey mate, started watching you a couple of months back. Love the input and knowledge. Keep up the good work and have a happy new year. Okay, so this particular comment is just my ego needed a bit of a lift. Well, not really. My ego doesn't. I just need a bit of ego stroking, I suppose. Thank you for that, Blake. You're very welcome. Hacho, some more ego stroking here. Hacho says, you put me on Mayfield Group a year or so ago. Forever grateful. Charger Metals, Proteomics, and EQR for the 10x plays. Love your work. So Mayfield Group. Still remember when I bought this one? I saw what they do. It was a company I never looked at before. At that point in time, highly illiquidly traded. You can just see that just in the chart. Share price had popped up, and I had a look at it and went, oh, this company looks really interesting. We're talking about the start of 2024. So they're in the right space, electrification, so tailwinds, electrification, that sort of thing. So provision of telecommunications and power quality solutions and services. Involved in manufacturing switchboards, transportable switch rooms, electrical production panels. So provides maintenance services for electrical and telecommunications infrastructure. In my opinion, that is in the right space. We do need significant improvements to our electrical infrastructure. I've thought that for about 3 or 4 years, maybe even longer. And that was a long-term theme. And that is one of the reasons I got interested in Mayfield Group. And this is one case where I had to be patient. Share price did nothing. Bought at 78 cents, 29th of April. Share price did nothing for almost 1 year. Almost 1 year. Share price went sideways. And then the breakout really, we started to see signs of breakout in January 2025, 1 year ago. Less than 1 year ago. I can't believe that. And then the share price has gone bonkers. And you can definitely see a bit of an increase in liquidity. And that is one of the powers we have as individual investors. We can buy these liquidly traded companies, and then they become more liquid as the company becomes more well known. And then you get fund managers buying into it. And that is what we're seeing with Mayfield Group right now. Now, maybe Mayfield Group is a little bit expensive. P ratio 41. Whew. So it has run hot. When I bought, P ratio was 10, maybe even less than 10. Yeah, it would have been less than 10. I can almost guarantee you P ratio would have been less than 10. In fact, I could look this up, Mayfield Group. And you think there was no interest even when the P ratio was less than 10. So what I do with P ratio, just go to Physical AI, have a look at P ratio, historical levels. And when I bought, the P ratio was 7, 8. P ratio, this came to a 7 or 8 when I bought it. And the share price did nothing for 1 year. Now it's 41. And that is exactly what you want. Well, no, maybe not exactly. So what you want is, that's called that's called multiple expansion. The way you really get nice increases in your wealth is to buy companies that might be good value, like Mayfield Group was, P ratio of 8. Then you see multiple expansion. The market is willing to pay more of a premium. So you could say maybe there's a bit of FOMO when it comes to Mayfield Group right now, but also you get financial expansion as well. So you want the multiple expansion plus financial expansion. I would say right now that for Mayfield Group to go much higher from here, you also need to see it concentrate on financial expansion. We're not going to get much multiple expansion from here. So I think that has come out and played out. One of the reasons why I might maybe take some profits, but I haven't even thought about taking profits yet. And if you have a look at the financials of the company, they're doing really well. So let's have a look. Revenue, and we'll just go income, and we'll get rid of P ratio. So nice growth. Well, but even if you look at income, it's only at 6.8 million, and that will grow, in my opinion. But nice growth in revenue. Okay. The other reason I wanted to just mention this is Proteomics and EQR are two companies I'm trading right now. Charger Metals did release something, and that is in my watch list as a potential trade. So I would love if Proteomics and EQR becomes 10 baggers for me. So these are ones I'm trading. So this is a little bit of a new strategy for me, is finding a 10 bagger, which means I have to delve deeply into story stocks, companies that have sort of lowly valued, and just because that is how you get a 10 bagger. I keep meaning to do a reaction to this particular article on Livewire written by, pretty sure it was Carl Capolingo, The Holy Grail of Investing, How to Spot ASX 10 Baggers Before the Masses Pile In. And I was actually planning this before I read this article, because this article was released on the 16th. So I had already initiated this strategy, or this new strategy. And then I saw this article and I was like, yes, everything I've been thinking is in this article. And one of the things they mention here is, if they have, common traits. The vast majority were pre-revenue, let alone profitable, and a lot of them were really small. Statistically speaking, the ASX 200 is a terrible place to look. Here we go. How I spotted every ASX 10 bag in 2025. Okay, no, that's a different way. But if you have a look at the market caps of these companies before they went 10 baggers, we're talking about market caps less than $10 million for a lot of them. And then they released something powerful and the share price just went bananas. So that's Proteomics. Chart looks pretty good. EQR. Chart looks pretty good. And most of the reasons I bought into these is either the chart's starting to look good, or have a look at volume. They've also released something good. And most recent one on my list, I haven't bought this one yet, is Charger Metals. What was the ticker code again? It's not, that's Charter Hall, CHC. CHR maybe. Charger Metals. And this one's popped up recently. So this is definitely on my watch list right now. Look at the volume. Look at the volume. If I see the share price of this one pull back to 10 cents, that would be a buy for me. Almost immediately. So thank you for that, Hutcho. Giving my ego a bit of a stroke's always good. What's happened? It's a big gap there. Okay. Oh, thank you, Hatton Anderson. I just got to mention Anderson. Happy New Year. I knew I would not be the only one looking at companies on the day. Every day I look at something when it comes to companies. Even on New Year's Day, I was looking at companies. I was doing a few things. I don't do it all day. I might do it for an hour or so, but every single day I do something when it comes to the stock market and investing. So, for instance, on what I do every single day is like I play a few games. And when I say games, I mean Wordle, a few mind games, not psychological with my parents, but a few mind games that help your mind, that sort of thing. I watch a little bit of TV, I watch a few shows, or maybe watch a movie. And I don't watch a movie all the way through. I might watch 30 minutes of a movie. Yes, I do weird stuff when it comes to movies. I don't watch movies all the way through. I watch movies as though they are a TV series. I watch 20 minutes at a time. And I do know when I really, really like a movie, I might watch it 20 minutes, then another 20 minutes, and then I watch it all the way through. That's when I really know I like a movie. But yeah, I never binge watch shows. I watch one episode maybe every week. And I do know I like a TV show if I watch 2 episodes in a row. Anyway, and then I read. I do a bit of reading. So I read novels. I listen to music. I typically listen to music when I'm doing research. And sometimes I get so involved in research that I forgot what music I listen to. Yeah, and then I do other stuff. Capel Seth. Okay. This was fantastic. Oh, Pursuit for a 10-bagger, which is a members-only video. So Capel Seth is a member. I have 2 questions. What is your strategy to buy and then to sell, apart from a 25% loss? Where would you classify stocks like 40 Medical, Bioxin, and X Reality? They are revenue generating by possible 10-baggers, perhaps not within a year, and the markup is small compared to their potential. I am wondering if this should be a standalone video, just reading this. And yes, I'm going to turn this into a standalone. For members only. I'm sorry, but members only. It's a little bit to unpack, and I could go on about 10 minutes talking about that. So I might move on. And Manim says, thanks for the audio track from Switzerland. So I'm assuming you just listened to the video, not watched it. And I'm hoping you were nowhere near that horrible fire that occurred. That was in a ski resort, sort of in central Switzerland. It was north of, I did have a look where it was. And I was in Switzerland 10 years ago. And I went to Zermatt. So I was in Geneva, Lucerne. Then I went to Zermatt. Then I went to Saint Moritz, Lucerne, Zurich. I went to Liechtenstein. I believe I went to Bern for a day as well. And I just went to have a look where this fire was. And I was very close to where these Lee Constellation structure fire. So hopefully you were not in that particular building. And I'm assuming you're not, because you wrote that after the event. Horrible, horrible. I watched a documentary on this really bad fire in Rhode Island at a concert. It wasn't a concert. It was a sort of a concert. Rhode Island fire. And the Station Nightclub fire, February 20, 2003, 100 people died in this particular fire. There was a concert, I forget what band it was called, and it was caused, the band was Great White. It was caused by a pyrotechnic display, ignited flammable acoustic foam in the walls and ceilings surrounding the stage. Fire remains the deadliest firework accident in US history. So they called it a firework. And I saw footage of this particular fire in Switzerland, and it seems like it was the same sort of thing. So there was a little bit of fireworks on top of the bottles or something, and then inflamed, ignited the ceilings, and there wasn't enough exits or something like that. And this documentary on the station Nightclub fire was quite illuminating. It was sort of heartbreaking. People trying to get out, everyone's rushing for the doors to get out, and it wasn't large enough. Anywho, I think even maybe one of the members of the band died. Anyway, so I think a lot of changes were made because of the fire in Rhode Island. Second deadliest nightclub fire in New England, 1942 Coconut Grove fire. And some people were charged. Someone was charged 500 hours of community service. Anyway, I've rattled on a little bit longer than I wanted to. But hopefully you had a good New Year's in Switzerland. I was there, during the winter, early winter, skiing in Zermatt. I'll never forget that. What a wonderful area. Zermatt is completely electrified, so you can't drive your internal combustion engine car in there. And it's just so peaceful and wonderful. And the place I stayed in Zermatt had a view of the Matterhorn. Oh, you could actually lie down into bed and open up the curtains, and the Matterhorn was right there. It was expensive, but worth it. Stayed there for 1 week skiing, and at that stage I was a runner, but not really a hiker. I've really become a hiker since then. Anyway, Ben Hutchinson says, my pick for last year, A1M, is that AIC mine's up 73%. Respectable, I'm happy with that. Kicking myself, I didn't hop on the 4D medical train when Pro Medicus bought in, and now it's now valued at $2 billion, despite quarterly revenue of just $1.4 million. Always underestimate the power of momentum. Yeah. So the 4D medical share price popped up 15% on Friday, 15.52%. So I do think, and I'm concerned, there's a little bit of FOMO right now in 4D medical. Because you can't justify that valuation, that sort of revenue. So 4D Medical really needs to ramp up their revenue, and they might do it. And it could be like a new Pro Medicus, where 4D Medical always looks really expensive. But I just go back to Pro Medicus, and when Pro Medicus was at this stage, and to be honest with you, they'll never at this stage. They always had revenue. They're always profitable, Pro Medicus. But when Pro Medicus was at this stage, they had a market cap of less than 100 million. So anyway, so I agree with this. Always don't underestimate the power of momentum, but you have to always be wary. The momentum can make a company's share price go bonkers, and to the point where it has to be a sell, in my opinion. I don't think 2026 can repeat 2025 for 4D Medical. I don't either. It is impossible, because the valuation of 4D Medical has gone up, 700%. It won't be able to do that, because then the valuation of 4D Medical will be like 14 billion, and I just can't see that happening. Most likely goes into reverse. I'm interested in picking up the losers of 2025: CSL, Clinical, Botanics, Telix, Orthocell. There's some great potential there. I agree with that. Devshah says 4D Medical may go sideways. What are your thoughts on Clarity and EBR? I'm not sure if that's directed at me. And Ben Hutchinson did answer. There you go. Some good insights there from Ben Hutchinson. Devshah also says, thanks, Kneppy, wondering if Paradigm is a good for long term, not for trading. Could it get to the same highs as 4D Medical? I believe the FDA approval is due late this year or maybe next year. The easy answer to this one is yes. There is potential. The question becomes, how likely is that potential? What's the probabilities about that potential? So phase 3 knee OA trial. Now, I don't know much about this company, but probably not the easy answer. The cop-out answer is there's always that potential. Because maybe this time last year, people were saying 4D Medical doesn't have that potential. And then the problem is we just don't know at this point in time which companies are going to do really well this year. It's an impossibility. It's an impossibility right now to know which companies will do really well, which is why another reason why I've started this strategy is, in my opinion, the companies that have a really good 2026 more than likely will release an announcement, will have a catalyst, and is just seeing that catalyst. And that has been the thing and even with 4D Medical, we saw the catalyst. Pro Medicus getting involved. Anyway, so Paradigm, I'm assuming they're just at the point where they have this story, and how successful is this story going to be? Paradigm Biopharma, a little bit of receipts, $33,000 in receipts. So the question becomes 4DA or FDA approval. So I'm just going to trust you. So if they do get FDA approval, the share price could pop up, and that could be the catalyst for Paradigm. That could be it. That could be the catalyst. So for me, I need to see catalyst for Paradigm. Let's have a look at the chart for Paradigm. Oh, so I do follow this chart based off all the lines I put in there. And this one is trading in a channel right now. So for me, a breakout, so a good announcement and a breakout above 48 cents would be it for this company. Market cap 145. Yeah. So you just imagine if this company releases something really positive, and you could see maybe a 10 bagger from here with a valuation of 1.4 billion. Doesn't mean it's going to happen. I would say the likelihood is probably pretty low. And more than likely, the company that has a really good 2026 is a company you may not have heard of yet. DG Home and Garden. Beach Energy looks good, has a new project coming online. Beach Energy PPT. Method says all energy stocks on the ASX are dogs. Simon PD says, and the dogs will bite back in 2026. Some good commentary here. And Method 31 says, people have been saying that forever. All stocks are good, depends on where you buy and sell them. Different perspective coming off support, higher lows. I actually sort of agree. I sort of agree with DG Home and Garden that, and it's important what words you use. So all stocks are not high quality. Most stocks are bad quality, but all stocks can be good depending on timing. And I actually agree that there is potential with Beach Energy. And the reason I say that, in fact, I haven't looked at this for a while. The reason I say that is last time I looked at Beach Energy, the share price was at a support level. Don't know why I haven't, very close to a long-term support level. Oh, there it is. So, in fact, the support level for Beach would be around $1. So I'm going to get rid of this line. So I've already put the line in. So that's $1, around $1. And the share price is not that far above it. Now, that's the only thing going for Beach Energy for me right now is the share price is near a support level at about $1. The daily chart looks meh. Weekly chart looks meh. When it comes to the company itself, I don't know anything. And in fact, in this sort of sector, I don't really want to spend much time on researching the company because I would classify Beach Energy as low quality. And unless I see something interesting having in the chart, I wouldn't be interested. And more of a trade for me. And if you buy this at $1 and the share price goes to $2, hey, that's a good trade. The stock is that's a good period. And it's done it in the past. Back in 2017, we'll say from middle of 2017 through to just before COVID-19. So for about a 3-year period, 2.5-year period, share price of Beach went from 62 cents to 288. Almost a 5-bagger. So it all depends on what time frame you're looking at. Motivational Flavia says, exactly like you mentioned, this was mind-opening to me that a very few stocks with infinite upside carrying the portfolio, even though others are down 40 to 50%. And then Method 341 says, it's called convexity, which I've never heard of before. Convexity refers to curvature in relationships, mostly the non-linear link between a bond's price and interest rate changes measuring how. Okay. I understand convexity in that term because it's convex. Anyway, but in terms of what Motivation Flavio is talking about, anyway, it's called convexity and why you should always try not to sell your winners. It's also why my least favorite saying is you don't go broke selling or taking a profit. You don't go broke selling a profit. I hate that saying. Really, really hate that saying because what that's implying is if a company share price is up, you should take profits, but you cannot get rich by always taking profits of your winners. Your winners, they go, yeah. Anyway, why you should not try to sell your winners unless you really have to. Most of your portfolio performance will be driven by just a few names. An example of this is S&P 500, where the FANGs have been driving most of the gains in the past 10 odd years. In fact, if you listen to the guy, David Garner, who is Motley Fool. So a lot of people poo-poo Motley Fool, but David Garner, who is the founder of Motley Fool in America, but Motley Fool in America is completely different than Motley Fool success. His success is finding companies that have tailwinds behind them. How he succeeded, and just holding on to them. Yeah, rule breaker. So he finds these companies that traditionally wouldn't be known. They seem expensive. That's another thing I remember him talking about. They seem really expensive. No one holds them, but I buy into them, and they go bonkers. So to focus on the long term, patient buy and hold strategy. So some of these holds are like 30 years long. Add up, don't double down. Contrary to traditional buy low and sell high advice, he advocates for buying high and trying not to sell. So you keep on buying these companies that are performing really well. You just buy. Embrace risk and volatility. So he does buy a lot of companies that would be unconventionally, like if you listen to some of the Motley Fool Australia people, they would not have this strategy. 6 traits of rule breakers: top dog and first mover, sustainable advantage, past price appreciation, good management culture, strong consumer appeal, overvalued by the meter. That is the one thing I remember. So he has no hesitation buying into companies that are considered overvalued. He's done really well using those. And the reason I was talking about him, don't sell your winners. He has not sold some of his winners, and some of his best performing companies. I'm pretty sure he held Amazon for a long time. Nvidia, I'm pretty sure he bought fairly early on. Nvidia, recommended in 2005, gains of 1.2 million%. Netflix, bought that in 2004. Returns of 937,000%. Tesla, 2012, 80,000%. Amazon, 1997, 86%. He's not sold them. And the other thing you should also know is he's had a success rate, I believe 60%. Success rate, 60%, which is sort of normal. 60%. Oh, 70% of all picks have been profitable, but a lot of his companies that he owns in his portfolio, they're down almost 100%. But he's just relying on maintaining holdings in these really profitable companies. And even Warren Buffett, most of his gains, his success has been because of a few companies that he's just held on to. So the worst saying in investing is you don't take profits. You don't go broke by taking profits. Horrible saying, in my opinion. Simon PT, Vysarn deserves chart of the day. I got into that company because of Kneppy, so I'll be buying you another hot chocolate. Thank you. Yes, it's my best performer, well on the way to $1, says Roger Dawn. For full disclosure purposes, I am a shareholder of this company. I held it for the longest time, and then I took profits. It was a stupid decision on my part, and then I bought back in. That's another very important trait for successful investors is I know a lot of people have this belief. So I rebought back in Vysarn at high price and when I sold it. And a lot of investors refuse to do that sort of thing. Yeah, I'm not going to do that. I sold at lower price. I think that's very silly. Personally, I think it's very, very silly. So I have no qualms buying back in if I've made a mistake. You have to admit when you've made a mistake. And I made a mistake with Vysarn. Big mistake. So if you have a look at the daily chart, I bought way back somewhere. It was a good decision buying in the first place in 2023. I think the share price was like 20 cents or something. Then I took profits. See this little period where the share price was not doing much? I took profits somewhere in here. Yeah, I don't know when. And then I bought back in recently. And the share price has gone bonkers recently. Now, this is my super. So that means I'm not trading. It's in my super. Don't really pay attention to the charts of companies in my super. So I had no idea the share price of Vysarn in the last week went up 16%. Had no idea because I've not been tracking its chart. So when Simon says it deserves chart of the day, the reason it didn't get chart of the day is because I hadn't been following it at all. Anyway, so I do like Vysarn, and it deserves a spot in my super, even though I probably wouldn't classify it as high quality, but it might be later in the future. Sensei mentions what made 40 Medical go from 23 cents on the 9th of July to 4.54, 2nd of January in 6 months. Saw it at 25, 26 cents 7 months ago, but thought it was a dud. Ignored it. It didn't bookmark it to watch the chart regularly. Simple. Pro Medicus. Pro Medicus took, I forget exactly what they did, but they gave 40 Medical some money or something, or took a stake in 40 Medical, and that was this. That was the catalyst. And then 40 Medical announced a few pretty good contracts, wins, and that is all she wrote. So if we go back to July, here, I'm trying to find it without even looking. Here we go, 31st of July. 40 Medical secures $10 million strategic investment from Pro Medicus. I remember this happening, and I was thinking to myself, ooh, this is pretty good. Maybe I should take a little position, 40 Medical. Share price popped up 27% on that day. Share price closed at 30 cents. And that was it. Look what happened to share price since then. So that was a catalyst. And the way I justify it is I'm a shareholder of Pro Medicus, and Pro Medicus is doing really well because of 40 Medical. Well, actually, that's not true. Anyway, so it's just confidence in the company because of confidence from Pro Medicus. That's it. Again, it's finding the catalyst, I don't think Pro Medicus share price would have popped up if it wasn't for that. So it's just finding the catalyst. And this was an interesting catalyst for me. Just acronym. Sam Altman has committed OpenAI to approximately $1.4 trillion in data center infrastructure spending over the next 8 years, but no idea how to pay for it. Bubble question mark. I would say there's a chance we'll eventually get into a bubble. Is it now? I don't know. But we have seen this all in the past with technical advancements, particularly technical advancements that have really advanced civilization or human civilization. They always went into a bubble. Always. We always have seen bubbles. So I think no doubt AI will eventually get into a bubble. I don't know if it's going to happen right now or it's happening right now. How is he going to pay for it? I think OpenAI will become extremely profitable eventually. But I'm excited about what's happened. Not only AI, robotics. I'm excited about automation. So automated driving, really excited about robotics, really excited about the advancements we're going to see in the next decade when it comes to that. And I think the companies that are going to benefit from that, I'm not sure they even exist. Or they might exist right now, but we don't know they exist. We don't know they exist. So it's going to be really exciting about which companies are going to benefit from all this. And some of the biggest companies in the world, I think, will be the beneficiaries, which is why I have a stake in some of these companies. But my question is are we in a bubble right now? Everyone says valuation, but it's completely, the companies right now we have, the biggest companies right now we have in the world are so different than the past. They are so different. They are the ones leading the charge forward. This was not what happened during the bubble.com burst. A lot of those companies were crap companies. Well, Microsoft was a part of that. Cisco was a part of that. But even if you have a compare Cisco systems and Microsoft valuation back then when the bubble burst, they were way more valued. They were way more expensive than all these companies all these companies are valued right now. We're talking about P ratios of 30 for these companies, and they're growing. Anyway, so I think there's just too much chatter about bubble as well, which is interesting because I heard someone say, well, just because that's not an argument to say we're not in a bubble just because everyone's talking about we're in a bubble. But the very fact that everyone's saying we're in a bubble, shouldn't that be a negative thing for the market? We're not seeing any significant downside. Anyway. Oh, and the final comment from Sensei, and this is regards to my own top 20. Kneppy, for your 2026 top 20 predictions of best growers, are you going to pick an unrestricted portfolio? You can also pick your stocks your viewers pick. No, So it is going to be restricted portfolio. So the stocks you pick, they would eliminate me from picking them. So they definitely restricted portfolio. I think I did this last year as well because there was no overlap. I want no overlap in the companies you pick to the companies I picked. I've already chosen some companies and I've gone, I won't be able to choose these companies because you've already chosen them. Anyway, so like Telix Pharmaceuticals, I was thinking about that. CSL, thinking about that, but you have chosen those companies, giving it away, some of the companies you have chosen. And also a restricted portfolio where you can't pick any ASO stocks on the viewer's portfolio. Yeah, you just mentioned that. Yes. So that on 1st or 2nd of January 2027, 3 portfolio results will be analysed how well they went. You picking wait, there are 2 versions. Oh no. I'm not gonna have 2 versions. I'm only going to have 1 version. And the question I have is what strategy? So last year I went from beaten down stocks, maybe value. They did okay. But I'm thinking I'll go for the venture capitalist way, pick a portfolio, group of 25 mining explorer companies, and just hope 2 of those companies go bananas. But the problem with that is you might be waiting for a catalyst all year, or there won't be any at all. So choosing those 25 companies, I think, would be really hard because I could just pick randomly, but I don't know. I'm not sure exactly what I'm going to do just yet. But definitely only have 1 portfolio. Maybe I could do 2. I could do that strategy. Yeah, maybe I could do that. That strategy, picking some mining exploring companies, biotech, pre-revenue companies, hoping there's going to be a few 10 baggers in there, and then pick a list of companies that I think could be beaten down, turnaround stories, that sort of thing. And when I say turnaround stories, I'm just talking about chart. So I might do 2. Yeah, there you go. Thank you for that, Sensei. That is all I have for this answer reply video. If you have any questions, any thoughts, leave it in the comment section of this video. If for some reason, there we go. Looks like my camera was pointed upwards. Anyway, if you have any questions, any thoughts, leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.